we have today is we have Jason Sprenkle. He's the CEO of Key Data. He's also the owner of 360 Blue. Told me not to say he's the CEO of 360 Blue because we don't want to make Ashley angry. So we also have Cliff Johnson from Rented. And Cliff was also one of the co-founders of Vacasa, which we'll be talking about later too, by the way. But what we're going to do is Jason's going to present some data, and then we're going to talk about it. And then he's going to present some more data, and we're going to talk about it. I'm going to get down here and bring the mics around. So if you have questions about anything that you see, let me know, and we'll just raise your hand, and we'll get it to Jason, and we'll talk more in depth. But what he's done is he's divided kind of the west from the east. So we have Fort Morgan, Gulf Shores, Orange Beach, and Perdido Key. And then we pick back up in Destin, Miramar, 30A, and Panama City. And so we're looking at how the destinations did in 2019, especially year over year, but also 2 years, like since 17, 18, and 19. And then we're looking at pacing for 2020. So with that, I would like to welcome Cliff and Jason to the stage. And again, thank you guys so much for being here. You're wired.
Thank you.
Good morning, guys. How are you? Hear me okay? So appreciate the opportunity to be with you this morning. I saw Tony Santilla first on the way in, and I think he speaks for everyone when he said, if I knew you were showing us data first, I would have slept in for an hour. So hopefully some of this data will be things that you didn't expect, and like every time you look at data, we all see things differently. So I rely on the people in this room heavily to tell me what they see in the data, and did so over the last couple of days in preparing for this. So I've kind of shared with you what I thought the data told us and our team. But like Amy said, you guys may see different things. You certainly understand the influences on your individual markets better. So love the opportunity for kind of an open dialogue about what's up here, and if it feels wrong to you, let's talk about it as we go. So Amy said 3 things I want to hit that she asked us to address. First, I just want to talk about like the lay of the land, right? Fort Morgan over to Panama City, how these submarkets compare. When we look at the quantity of data and the quantity of properties and the types of properties, we all have very distinct markets. So I want to show you a little bit of slides just to get the lay of the land, get a feel for kind of how you differ in performance, and then take a deep dive into 2019, in particular kind of look at what the hurricane did and how far that impact went west, and how the western markets are really performing different than the eastern markets, and differences in condos and smaller condos and all that kind of fun stuff. Some real interesting trends that surprised me last night. Sorry I missed the party. 2020 pacing and outlook. What are we seeing for the year ahead? How does the last month look? And most importantly, what are we seeing for spring break, so you can get a feel for what's coming up in your markets? So first, I want to tell you, I'm 99% sure that we're releasing today our new scraped supply data. And so a lot of the slides that you'll see, the next 4 or 5 slides, are data that we have that are, when I say scraped supply data, I mean we go out and we scrape data off of VRBO and Airbnb to tell you what the supply is. Very separate from the performance data that we get from you guys, and I'll separate those two, but these are the screens that should be available to all of you this afternoon in Key Data that just tell you for any particular market, what is the supply from Airbnb, what's the supply from VRBO, how do they differ, how many 2 bedrooms, 4 bedrooms, how many houses with pools, et cetera, so you can get a feel for what's in your market. And so that's where this next couple of slides of data are coming from. So let's talk about geography before we start dumping data, so you know where these buckets are that we've defined. So this is what we call the Florida-Alabama Panhandle. You can see when we talk about data for the Florida-Alabama Panhandle that it includes things that are kind of outside of the core vacation rental markets or the sub-markets. It includes houses up in Laurel Hill that are on Airbnb or Bay Minette? And things that you don't think of as traditional vacation rental markets. So when you think about the Florida Panhandle, some of the data will be skewed by those properties up at the top. And then the sub-markets, this is where we're really going to show you all the data. So everything is going to be left to right. And on behalf of my marketing CMO who's here, he did not approve these slides. They're very colorful. My revenue manager said that it was the ugliest slideshow she had ever seen. But everybody's got a color. And so once you find it, it's in the same place, it's on every slide, it'll help you see the data a little bit better. So everything will run west to east, Fort Morgan, Gulf Shores, Orange Beach, Perdido, then Destin, Miramar, 30A, and Panama City. Obviously, there's a lot of other ways to cut up the data, but for purposes of continuity and understanding what we're showing, those are the buckets that all the data fits in when we're presenting the data set. So, some data on the scrape supply. What do we find when we go out and we count everything on Airbnb and Vrbo? And obviously you can do that, but the computers make it a little bit easier. This is total supply in our market, and it's cutting off just a hair to the left, but you can get a sense of the relative values. I was joking about the colors. These are your colors. If you're from Fort Morgan, watch the green. Green's always yours throughout the day. Panama City, blue, et cetera, et cetera. And this just gives you the relative size of the total listing deduped across both platforms for the entire Florida, Alabama Panhandle. So Panama City, obviously, with the greatest amount of supply, Orange Beach and 30A a close second, and you can do the math on your own. If you combine Gulf Shores and Orange Beach, or if you combine Destin and Miramar Beach, obviously those surpass Panama City in terms of total volume. These are just the houses. And I don't know if that slide surprises you, but it surprises me, and I'm on 30A. 30A has almost as many houses as everybody else combined, just short of half of the total supply in our market. And it makes sense when you think about kind of the depth of the neighborhoods like Watercolor and Rosemary, and 600 houses that feel like they're on the beach, but there's really 4 of them on the beach and 596 that aren't. So when you think about the impact of some of this data, the ADR, the RevPAR, and the occupancy between houses and condos, and you see that different performance, it obviously is affecting these different submarkets much differently. These are condos. Houses are now gray. So when you look at the condo supply, no surprise there, Panama City dominates it and Orange Beach dominates it. But when you look at the supply of condos to houses in some markets, you can really see how skewed they are, right? Just an overwhelming number of condos versus houses in Orange Beach and in Panama City. And those of you who live in those individual markets, no surprise, but for those of you trying to get a feel for the relative markets and how you're performing versus others, helpful to see. Airbnb versus Vrbo. I think everybody in the room who's got their units out on the distribution platforms probably has a feel that this is more of a VRBO neighborhood. It certainly felt like that. I did look at the submarkets for this. I tried to limit the slides a little bit for purposes of getting through breakfast, but it's a pretty similar pattern. You move 5 to 8% amongst the submarkets, or some submarkets are a little bit heavier. When you get back to your offices, you should be able to see the individual percentages for your data, but we're all within a couple of percent of that. So that's just VRBO, just Airbnb, and then both. So not a lot of people that are putting their units on both channels, which my perception was that was probably a little bit higher. I think the highest I saw in one sub-market was 17% of the units were on both channels. So how do we perform just in general against each other? Again, just kind of some lay of the land data so that you can get a sense when we get into how did 2019 perform, it'll make a little bit better sense contextually. So 30A with the number of big houses, definitely a higher ADR, average daily rate. No surprises there. So if you're looking at benchmarking across any markets, you're going to get a higher ADR on 30A, you're going to get a higher house supply. If you start to go in whatever data source you're looking at, if you start to put apples to apples against each other, and we'll do that, you get a much better direct comparison. So when you look at it as a market as a whole, or when you're looking at, these not global metrics, but these regional metrics, you got to realize obviously there's a big distinction in between the sub-markets and then the time of year. And so 30A with the highest ADR, Destin right behind it, and then Perdido and Panama City. And I've heard a lot of people ask me about how Orange Beach compares to Panama City. It's interesting to me with a pretty similar feeling supply to see how different they perform on some of these slides. Much lower rates for Perdido and Panama City than Orange Beach. Adjusted paid occupancy. I think somewhere in the last year or so we've made up some of these terms. I think you made some of them up and we worked with them.
So Jason, I'm going to interrupt you. What is adjusted occupancy versus occupancy?
Yeah, adjusted paid occupancy is just taking occupancy and pulling out the owner stays and the holds. And so you're just saying, how much did I book out of what I had to book? And so if you have a heavier use of the the properties by owners, we've got that pulled out of the equation. So this is how well did each market do of filling up the supply that was made available to them after owner usage. And so the interesting thing here to me is you see the exact flip, right? You see Perdido and Panama City, who were lagging the most in ADR with the highest occupancy. Probably not a surprise to some of you who've been doing this longer than I have. And then Destin and 30A, we just don't do well with snowbirds. 30A does essentially no snowbird traffic, it looks like. And so a real inverse, and the question is, once you get to RevPAR, is does it pay off to have the highest rates and the lowest occupancy or vice versa, and who's really winning? So RevPAR, we're going to talk about RevPAR in a bunch of slides today. I called Cliff about 3 months ago, and I said, man, we've got like 13 different names for RevPAR, and we're talking about RevPAR, but adjusted occupancy, and so it's an evolving conversation that we're having. I think you came up with adjusted, but I had something awful in there at the beginning.
Yeah, but no, just to try to, and it only tells part of the story because, it's a way to exclude dates that are occupied by owner. It still is very difficult to get the context of those dates. If somebody's using their house over Christmas and last year they didn't, that's a far more significant change than early December. So the narrower the window that you have on it, the more accurate picture you'll get on it.
That's right. And so RevPAR, again, it's in all the vernacular these days, but you're essentially taking your rate times how occupied you are. So if your rate is $100 for the year and you're occupied 50% of the time, it just multiplies the two together and says you're effectively getting $50 a night. So it's the best metric for saying, did you win or not, right? How much did I get out of all the nights that I booked?
And one thing I might add is that you definitely only use this as a trailing metric. I mean, when you're looking at future RevPAR, that's not a final number. So you could be pacing ahead on RevPAR, and that could be a very bad thing. It could just mean you're selling your properties too cheap. So use this as a good trailing metric.
I'm going to add that to my qualifier, my future RevPAR slides in a minute. Well said there. Yeah, you could be charging awful in terms of rates and your RevPAR be up. Okay, so staying with your colors, right? RevPAR for 30A, the rates dominate the occupancy is kind of the lesson if you remember the last two slides, right? The rates for 30A and Destin are so high that they're winning the RevPAR. They're getting more per night for the big 7-bedroom houses and 5-bedroom houses on average than you are for a 2-bedroom condo in Panama City. So no surprise there. All of our curves look the same, kind of gives you a sense of the lay of the land. So let's jump into 2019 performance. So the scrape data is out of the way now. All the slides you're going to see for 2019 performance are slides based off the data from those of you in the room that have participated in kind of the key data co-op, for lack of a better term. I always like to qualify the extent of our data. This data set's 69 managers and 12,029 properties. So it's not the entire data set, but it's enough in all these markets to get a good feel for where the trends are and where we're headed. So this is the non-marketing approved color slide again. So Fort Morgan to Panama City. And we've got 2017, 2018, and 2019. So 2017 is the dark bar, and this will be consistent throughout these slides. And we will distribute these slides after. We'll get Amy to send them all out so you have them. 2018, the middle bar, and 2019, the last bar. So this is adjusted paid occupancy. So how full were we out of the units that we had to fill up for the year? And what you see is an across-the-board drop. So everybody in the room, Fort Morgan to Panama City, lost occupancy from 2019 to 2018. You can see some of us gained or lost versus 2017. Destin, big drop from 2017 and 2018. Fort Morgan down, but still up from 2017. So some differences there, but across the Panhandle, both states, a drop in occupancy. This is the delta, the change in occupancy. So if the bars were going up, they gained occupancy. If they were going down, they lost occupancy. And this is just so you can see as a percentage of loss, who lost the greatest occupancy in 2019 versus 2018. So Amy was talking about West Coast and East Coast. I'm kind of splitting them down the middle there. East Coast, Destin, Miramar, 30A, and Panama City. East Coast had a much bigger drop in occupancy. You can foreshadow a little bit about and think about what the impact of the hurricane was, right? Hurricane didn't hit us this year, but it inflated last year. And so we'll look at the differences and whether when you're comparing 2019 to 2018 and you look at a drop or a gain in occupancy, how much was that impacted by Panama City in particular, because it fits into the total data. But Destin, Miramar Beach, and 30A, obviously a much steeper drop in occupancy than the rest of the markets. So this is just a different way of looking at that same data. 2019 is the dark blue bar, and this is January to December. Okay, it's a 3-year look. And so the most faded dotted line is 2017, and then the solid black line is 2018, and obviously the thick line is last year, 2019. So to start there in the middle, in the spring, you can see Easter switched, no surprises there. So Easter was much higher before, it moved later, and you see that that delta between the jump in Easter. You see that every year. It kind of jumps around and messes with anybody's algorithm that's trying to do this programmatically. But what I want you to look at, because it affects a lot of the data, is where the hurricane hit. If you start over there on the right side of the slide, that's the day that the hurricane hit, right? And that's 2018 on top, and you can see how far down 2019 is from 2018. So the yellow is at least partially impacted by the hurricane, right? Definitely in Panama City, and you can kind of guess that from here, and then you got to dig a little bit deeper to figure out how much that affected us over on the West Coast. And then if you switch back to the left-hand side, 2019's on top now, right? And so you've got 2019, January and February, they were obviously connected over, and you can still see that we got an inflated occupancy because of all the workers coming over. You know, people from out of town say, well, I thought Panama City would have a big drop in occupancy. Well, Panama City Beach, and I say this in due respect to those in Panama City Beach, was in enough of a condition that it could house all the workers from Panama City. And so it saw a bump in occupancy the day after the hurricane all the way through the spring. So pardon for switching around, but I've got the winter in the middle now, just so you can see the two yellow sections. I thought it was easier to visualize this. Usually all the slides will run January to February. This one runs August to July, so that you can see the winter months combined, and you can really feel the weight of that impact from the hurricane. And I kept pulling up slides over the last couple of days, and Scott kept saying, you got to look at the hurricane, the hurricane, the hurricane. And so finally I dug in, and of course he was right. And so if you look in there at the map in the middle, one of the things Key Data does is it tells you where the guests are coming from for any particular market. That map is where Panama City Beach revenue came from for November and December, okay? And it came from Lynn Haven and Panama City. It's like the sole dot, like nobody else was coming in except for some workers from Tallahassee and a few people from Atlanta. But you can go to the map and you can say, like, my suspicion is this is people coming in that were hit by the hurricane, and the map will show you that's exactly what it is. So let's look one more time at the delta, okay? Another delta screen. Up is a percentage change in occupancy from 18, and down is a percentage drop. And you can't see the shading really well up here, but the left is green and the right is red. So 2019 versus 2018, great start for 2019 when you're just comparing it to last year, right? But you've got to remember we had that artificial yellow bump, right? Because we got the hurricane impact from the workers coming over for the beginning of the year. And then when you get to the end of the year, we had the reverse happening, right? And so it looks like we had a terrible 2019 at the end when you're just comparing it to 2018 at the regional level, but when you really dig in, you know that there's a big part of that that's the Panama City impact for the end of the year. So take that, that lesson into account whenever you're looking at regional data for, a change in one year to the rest. There's an awful lot of things that affected at the sub-market level and the calendar year. Okay, average daily rate. That was all occupancy. So occupancy and ADR affect your RevPAR. So what did they do with rates? So maybe not surprising, everybody's occupancy was down, everybody's rates were up. And Amy asked me when we got together to look at this data, and she asked me a million questions, which caused me to miss the party last night because I wanted to answer them all with the data, and I didn't know most of them. But she said, why does everybody raise their rates across the board this year if occupancy's, not trending in a way? And I said, I think to some extent, some of us just get up and say it's January, raise the rates, and the owners expect that. I think there's probably a lot of you doing a lot better than that, like Cliff. But we certainly have a push from owners to raise them every year, it feels like. If you look versus 2019, rates up across the board. 30A, Miramar Beach, damn the torpedoes, we're just going up, 10% a year. The rest of you a little bit more consistent with 2017, but definitely a jump from 2018. So this is the delta. Remember the last slide, all the occupancy was down. This is everybody's rates are up. Who raised the rates the most? Orange Beach, Perdido, right? And then the question is, did they get away with it, right? Cliff said everybody can raise rates, but the market will respond. If you increase the cost of your widgets, less people are going to buy your widgets, and you got to do the RevPAR math to figure out if you want. So this slide is occupancy on the bottom. Those are the relative drops in occupancy, and the top is the relative increase in rates, okay? So this is why RevPAR matters. The next slide will do the math for you, but you can already start to see the relationships, right? So you can guess out loud with me who won and who lost, right? So 30A, rates barely went up. Occupancy went way down, right? You don't have to do the math. That's not so good. Perdido K, way up on rates, small drop on occupancy. Much better. You can kind of anticipate the positive RevPAR without even doing the math. And then some of them are tricky, like Panama City, Miramar Beach. Better to just do the math than guess. So this is adjusted RevPAR. This is the math, 2017, 2018, 2019. And you look at it with me. Perdido Key up on RevPAR really nicely over 2018, right? A little bit up over 2017. So you can either celebrate the fact that you had a great year in 2019, or you can be glad that you didn't have another year like 2018. Either way you look at it. And then some consistent patterns too. Destin, down, 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 right? 3 years in a row. Fort Morgan. Who here is from Fort Morgan? Anybody? Okay, Fort Morgan, up, 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 right? Win, win, win. So let's look at the delta, a confusing slide even for me, and I built the thing. So we're switching from years. The first one is occupancy that's down, right? If you look at Fort Morgan, the second one is your ADR that's up. These are the relative or delta changes. And the third one in color is RevPAR. So you can see how the math impacted it. So if you look at West Coast, you look at Fort Morgan, Gulf Shores, Orange Beach, and Perdido. Everybody has a raise in RevPAR, right? Colors are all going up. And you can see basically they got away with raising their rates, right? Who raised their rates the highest? Orange Beach and Perdido Key. They also saw the highest jump in RevPAR. So Orange Beach made the gamble to push the rates the highest, and ultimately they took a hit from occupancy as you'd expect, but it paid off the greatest for them. So those of you in Orange Beach and Perdido had a nice increase in RevPAR. Contrast that with the East Coast, right? Destin, Miramar, 30A, and Panama City. Destin just got murdered, right? A small raise in rates resulted in a humongous drop in occupancy. Miramar Beach didn't fare much better, right? A real big raise in rates for Miramar. And, why some people get away with raising their rates. Like Miramar, to me, looks like they did exactly what Orange Beach and Perdido did, but the market obviously has other factors other than just rates and occupancy, right? And I talked to a couple of you, and we'll go into some Destin slides, but a lot of questions. Is it the bridge? Is it traffic? Is it Destin tries to get away with too higher prices? You guys know better than I do.
Does anyone have any questions on this right now? Want to jump in or anything you want to say? Randy says thank you.
Well, a lot of it.
Well, he's in Orange Beach, so you know.
We've talked quite a bit about like whether a property is more of a commodity or not, and then getting into the condo data. So that could be one of the things driving this. Is your property a replacement good? Meaning, what's your feeder market, and are they coming out specifically to go to Panama City Beach, or are they weighing options in Orange Beach and Panama City Beach and other markets? So the more your property becomes a commodity, a replacement good, or very similar to other things, you have to play in that space. So if you try to raise rates too much, you're going to lose business, and you might not know where you lost the business to. So.
Do you think there's any destination effect of like guests migrating westward? Or do you think it's just rate, demand?
It's really interesting. I think one of the things, like I come at this from a perspective, I live in Atlanta now, so my circle of friends and people I spend time with come down to this region. Some of them do have places, like I always go to Seaside or something that might be their take, but for the most part, they're looking to go to the beach, And so they don't look at as much as, I want to go to the West End or East or a particular market. And it's funny because I'm from Missouri, which is also another feeder market, and it's a similar dynamic where people will consider properties across different areas. And so I think that's something that, the way we do revenue management at Rented, we look at it from a guest perspective, which obviously as a manager, you know your market so well, and you get used to what's historically happened. We have seen that the Orange Beach managers, for whatever reason, seem to be taking the Airbnb crowd more than the Florida managers, and I don't know why that is, but if you see the data that Jason shared, there's not much of a pickup on Airbnb in this market yet, but that's a completely different group of travelers and how they search and what that demand is. So I think what I would say is probably one of the biggest drivers is that I don't think the Florida markets are capturing the Airbnb demand yet. And they are a little more price sensitive too. So
that's why I learned so much from Cliff over the last 2 years in particular. He hadn't seen the data I pulled last night, but he's dead on the couple of slides I pulled late last night on commodity, and you'll see that pop up. Split houses and condos, right? Talk about commodities versus like that special 6-bedroom house that I'm coming back to every time, and I've got to be on 30A or I've got to be in Orange Beach for it. So this is houses in color. Sorry, all these slides require explanation. Condos in gray, okay? And this is the RevPAR we're looking at. So if you just pull the houses for that particular market, like take Orange Beach, if you just pull the houses and look at what their RevPAR was, Delta for the year, and then you just pull the condos, what you see is Orange Beach and Perdido, their houses did fantastic in terms of a gain in RevPAR, not much movement in condos, okay? So if you're saying, man, our RevPAR's up in Perdido, we're doing great, you got to keep splitting it, right? You got to keep saying, well, is it all of ours? So before you get excited and raise your rates for your 2020 houses, you got to go in and say, was that the houses or the condos? So you got to split it up a little bit. Bigger difference than I expected. And then look at Destin. Their entire drop was from condos in RevPAR. And that entire drop was almost universally related to just a drop in occupancy for the commodity that are smaller condos. So let's jump into Perdido Key and let's jump into Destin, because Perdido Key won the day in terms of highest ADR or RevPAR increase, and Destin won the worst of the day for the biggest drop in RevPAR. So try to see what happens. So pull Perdido Key. This is January to December by week, okay? Dark blue bar is 2019, dotted line is 2018. So really all the way across, Valerie, this may be old hat to you, but all the way across a really steady jump in rate. Just got to pushing rates in early summer and just kept them up the whole way, right? I assume y'all were seeing success and just rode with it all the way through. So what did it do to occupancy, right? I'll go back one. They raised rates particularly high in September and October. Here's the impact to occupancy. Didn't work in September and October, right? Just didn't get away with it. They had a bigger drop in the fall than they had in occupancy than they had an increase in rate. So loss of RevPAR in the fall. So where did they win? Remember they pushed rates up all summer occupancy still stayed up. So if you look at the win-win column, they won in the winter and they won in the summer. And of course, summer's where all the money's coming in. So if you win when the getting's good, you ultimately end up winning. So you can kind of dig into Perdido and you can say, why did they have such a good year? It's really because they raised rates in the summer and they anticipated that the market would still show up and the demand was there and they showed up, and so they won with the RevPAR, and it pushed their RevPAR up back to just a little bit above where it was in 2017. So what happened in Destin? And I think this goes to Amy and Cliff's inclination. So this is same screen for Destin, but I just jumped to RevPAR, okay? So you can see our RevPAR is down. I wish the shading was showing up. You can see the shading, it's all red, it's barely there, but RevPAR is down essentially the whole year, okay? If we go back to the beginning when we looked at that yellow phase of the occupancy, if you look at that end couple of months, like 2018 is the highest part there in November and December, and that was when people, and if you look at the map there, that's where our revenue in Destin was coming from. So those workers from Destin, the people who were escaping Lynn Haven and Panama City, the people who were coming in from Tallahassee, they were filling up Destin condos per the map and Destin houses for that last 2 months. And so you can attribute some of that hurricane impact to why Destin took a hit in 2019 versus 2018, but it's really just that last couple of months, it doesn't pan out and continue. And so our hit is much more significant than just the impact of the hurricane. So why? And again, where? Remember, if we don't know why, we keep slicing down differently. This is houses on top, condos on the bottom for Destin for paid occupancy. Houses had almost no change in paid occupancy in Destin. 0.8% drop, just same people who showed up the year before showed up this year, or at least the same number of people. On average, you still see that November adjustment. But look at the condos in Destin. And back to your commodity point. And then look to the right of the screen when you split up the two-bedroom condos. Two-bedroom condos in Destin saw a 16% drop in occupancy, right? Somebody who was loving the commodity before is not loving the commodity.
Well, and this ties back to the supply data that you're sharing now, too, is as you start to see that supply data change in your market, being aware of it. It doesn't necessarily mean you need to overreact to it, because if there's 10 more two-bedroom condos this year than there were last year, that's probably not moving the needle. But if there's 100 more and they're all newer and nicer and they're being priced below what your older inventory is being priced at, you're probably not going to get bookings. So that's something that we've seen quite a bit in this market, because there has been a lot of newer construction.
So if you're building two-bedroom condos in Destin right now,
yeah,
send out the flyers.
Yeah.
So,
Hang on one second, Jason.
yep.
It's Glenn Kaiser.
Morning, Jason.
morning, Glenn.
Anyway, I'm sure you're able to analyze nights per stay, but are you able to take a look at the booking policies, the minimum nights per stay, to especially in the two-bedroom condos, if you've got a higher minimum 4-night stay, that's impacting results for two-bedroom versus 3 nights or 2 nights or whatever. I know that you may not be able to pull that out, but just curious as to.
Yeah, so we obviously can't see what your policies are, but the data can show when that length of stay is dropping. And I'll skip to the next slide here. There's your average length of stay in Destin. Yeah. And it's hard to read the numbers there. 6 is the top line and 5 nights is the second line. So it's dropping between 6 and 5. And this is just the summer. But to your point, my guess when you look at the drop all summer in length of stay, right, by about a half a day, and you go back to that last window, and this is summer in the middle, and you see a significant drop in the booking window, and then you go to this third slide, and you look at the middle of the summer, and that's Destin's average stay value, and it's all down for the summer. My guess and y'all's guesses collectively are way better than mine, is it sounds like we probably had 7-day booking windows, and we were confident, we had a good year before, and then we wait, and we wait, and we wait, and then we drop rates, and then we book a 5-night stay instead of a 7-night stay, and people stay less long, and obviously their stay value goes down and their booking window goes down.
Yeah, actually, I think that's the biggest issue in the industry as a whole, is that there's a lot of artificial demand suppression. So this market's actually not as bad at that as some other markets that we work in, where the min stays and especially fixed check-in days really kill demand. Because people, the number one way people search is by date. So if they search for their date and your property doesn't show up, they definitely aren't booking it.
Yeah.
And so I think a lot of the data around that, the missing data is what is the true search demand for particular dates that no one's even coming because they couldn't find the right fit. So I think it's a really good thing to look at. It's very hard to dissect the policies in the sense, like, because we pull a lot of data as well and work with them closely on the data they're pulling to identify, because a lot of times people might have a 3-night min for the weekend and a 2-night min for the weekdays, and so it's really, you almost have to crawl and search every different possible search mechanism.
It is kind of interesting though, because in Alabama is the just on average it's 2 to 3 night minimums, right?
Generally, you've got some
In condos.
with condo docs sometimes.
But in Destin, it may be longer. Just on average, they may be 3, 4, 5 night minimum stays in the condos. So it's interesting to look at it that way.
Well, I've had a debate with some of the people in the room this week preparing for this about whether we just need to get rid of 7-night stays and whether the data is going to prove that you book better. Got a lot of smart people on some panels coming up today, so I'm interested to hear the thoughts on what we should be doing about that. So let's look at 2-bedroom condos real quick, and then we'll get out of 2019 and jump to the forecast. So when I met with Amy the other day and showed her the initial data, she asked that question earlier, what's happening with 2-bedroom condos in Destin? Like, are they all going west? And I made something up because I didn't know, but I looked last night. And here's what I saw. The adjusted RevPAR for Orange Beach and Destin for 2-bedroom condos, and you see Panama City's just behind it, are about the same. So you get at Cliff's point about these are probably just commodities. A 2-bedroom condo on a white sandy beach is a 2-bedroom condo on a white sandy beach. It's not your family's favorite, 5th year at the big 7-bedroom house. And so what can you get away with? You look on the left here, this is where colors come in handy. Oh, it's showing up there, it's not showing on mine. So Orange Beach, Destin, and Panama City. Pardon me for moving Destin over. No, it's in the right spot. So the ones on the left are occupancy, the middle is ADR, and the right is RevPAR. Look at Destin's rates for its 2-bedroom condos, right? We're really proud of our 2-bedroom condos compared to Orange Beach and Panama City. And then look at the occupancy. Our guests are not as proud of our Destin 2-bedroom condos as we are. They're about equally as proud of Orange Beach and Panama City's 2-bedroom condos, right? So the guests have made that adjustment and said, no, it's worth about $94, $97 on average. So we were trying to figure out, are they driving past Destin, or did everybody from Destin start going to Panama City and Orange Beach? And here's what the heat map shows. If you look at the left-hand side, that's Orange Beach summer heat map for 2019 for 2-bedroom condos. And look at that area that I circled in red. Those are people who are not going to drive by Orange Beach to pay more for Destin condos, 2-bedroom condos. And then look at Atlanta. And this was one of those data points that kind of surprised me, and I checked it a few times. Whose Atlanta's circle is the smallest, right? It's Destin's. So Atlanta people are going for the better deal, it looks like to me, right? They're going to Orange Beach, or Panama City first, Orange Beach second, and Destin third. So I think Destin's really got to look at their rates on their 2-bedroom commodities and think about the supply. And, think about what we do to attract some of those people that are otherwise saying, I'm going to go get the best deal. And I think the distribution channels and the Airbnb, you see it all right next to each other. You don't have to go get the old Dale Peterson flyer. You can see it all now. So splitting up the Atlanta market, but definitely impacting Destin. A few minutes on 2020 pacing. Real quick, rates are up 6.6%, okay? think you said be careful of the forecasting data, so you tell me when we don't need to read into this stuff, because I read into everything. A little bit down at the beginning, but up starting in the summer, right? So we've got our rates, and this is for the Panhandle as a whole. And you've learned the lesson from the last 30 minutes that it's going to differ drastically for each of you probably, but certainly a rate jump across the board because that's what we do. So adjusted paid occupancy. Look at the beginning of the year. We're way down in January and February. And I should have put 2017 on there. I was looking at that with Scott this morning, so I pulled it up. About half of that is hurricane related, I think. If you look at 2017, it's right between 2018 and 2019. And so a portion of that is just we had a good occupancy in Panama City, in Destin, and Miramar Beach that first month of last year, so we're pacing behind that. So I wouldn't read too much into the entirety of that for January. And then pretty steady across the way. So 15% down, but again, I think there's a story for that. So let's jump to spring break. And there's probably a lot of you who have spring break figured out better than I do. This is by week. So you see 3/7, 3/14, 3/21, 3/28, and 4/5 for the spring break weeks. Again, blue line is 2020 this time. And these are as of, so this is how we're doing now versus how we were doing it this same exact day last year and the same exact day the year before that. And so we are down, this is occupancy, so we're down for the 3/7, up for 3/14, down for 3/21 and 3/28, and up significantly for 4/5, okay?
And that's Atlanta's spring break, so I'd say there's also people are underpriced. That's why that's up.
Yeah, and so these are the rates,
Yep.
and interested to get everybody's read on this, and we send it around. I hope there'll be some chatter about it, but this is going back to occupancy real quick. If you look at this versus the rates, it feels like in the weeks that we're down, you guys have appropriately adjusted rates down, and in the weeks that we're up in occupancy, you've appropriately adjusted rates up, whether you've got it far enough up or not.
Yeah.
Something Cliff can help you with. But you see the same jump in rate weeks and occupancy weeks, which I think is a good sign. So last slide or two on the feeder markets. Remember last year where like Austin changed their spring break week, and a couple people changed their spring break week, and it was right when we had feeder market data coming out, and we were all calling each other saying, what the hell's happening in the second week of spring break? A little bit easier to see it now. So let's start at the top. A lot of data on the slide, but Florida, Alabama, Panhandle as a whole, if you go to 2019, number one feeder market for the week of 3/7 was Panama City, okay? Panama City, that's hurricane related. If you look at 2020, Panama City, not Panama City Beach, Panama City and Lynn Haven. Obviously not a feeder market for 2020, so take that one off. But the real impact is in 2019, you saw Houston was number 2 and Dallas was number 3. Both of those markets, which are massive markets for this area, as you know, have shifted their spring break to a week later. And so that's why you see it coming out of the 3/7 column and going into the next week column, and consistent with that. And then you look at the sub-markets, Orange Beach and every slide, they're just consistent. Seems like the people who come to Orange Beach keep coming to Orange Beach. You guys must be doing something right, but the markets are almost identical in terms of rank each year you look back. Panama City lost Texas. It dropped from 4th to 14th. No surprise there because we lost Houston and Dallas on this week of 3/7. But you do see it pick up the next week, and they all show back up. So you didn't lose them, you just lost them to a later week and replaced them with snowbirds. But snowbirds don't pay as much as people from Houston, and so you've got to make that rate adjustment accordingly. And then 30A, some small drops on Ohio and Illinois, but nothing real significant there. And then I jumped to 328 just as a second week to give you a sense. Like I said, all this data is available so you can go in and look at each week. But everybody from Atlanta knows Atlanta spring break shifted a week later. So Atlanta was number 1 for 328 last year. It's number 42. Like Atlanta people, I think, rent one big caravan bus and they all show up. Nobody's allowed to come the week before spring break. Nobody's allowed to come the week after. So 1st to 42nd, obviously a massive drop in the number of people coming on 328. And then if you look at the individual markets, Orange Beach just is steady as anything. A little drop in Minnesota for Panama City. And then the Georgia drop for 30A is the Atlanta spring break. So no massive surprises that I saw in the data for spring break shifts. Easter's obviously moved, Atlanta's moved, Dallas moved, Houston's moved. But you see those trends following and filling in the next weeks. But when you sit down to do rates, you better move the rates into the right column based on the spring break. And then last slide, I think. Where guests are coming from for 2020, heat maps for 3 of the big markets. And been having a conversation with Amy and a couple other people about, this commodity question of like, are we really fighting over the exact same markets for our summers? Again, I think you could take this heat map and look at it for big houses and small condos, and you would see some places where we are fighting. But what I really saw here is more differences. I do have 38 in the wrong location on this slide, but I wanted to show the parallels between Panama City and Orange Beach because a lot of people talk about the similarities in those markets. And you see some overlap, but you really see, Orange Beach pulling significantly from, a different market than Panama City in many respects. Obviously some Kentucky, obviously some Atlanta, but Panama City's dominating Atlanta over Orange Beach, and Orange Beach is obviously dominating everything west. And then 30A, only people from Dallas and Atlanta come apparently. And Houston, it's interesting when you look later in the year, Houston fills up quicker. So I think the Houston people are just chilling a little bit compared to the Dallas people, but they fill in real similar to the Dallas market over time, but they're definitely a later booker. But different maps affect your rates. If you're not digging into some of this stuff, if you don't have somebody helping you understand it, dig in, because there's a lot of people in this room, more so than any place in the country, that are getting really good at this stuff. And when we want to look at other markets around the country, we usually come ask somebody in this room. We just have a lot of the talent across the country in the room here when it comes to figuring all this stuff out. So the good news is you've got incredible resources that are next door to you to lean on, and most of you are really good at this. The flip side of that is you got some stiff competition, so a good opportunity to dig in and keep up.
So what we're going to do is we've got a really short break here, so I'm going to let you guys hit the restroom, grab some more coffee. Jason's got a key data workshop later on in the agenda, so if you want to take a deeper dive and ask questions, I assume Cliff's going to be in there too to help that out. We've also got some tech presentations to talk about and some revenue management stuff to follow this up.